Trade the MBI.com. This is John. Reports for the 19th of January. Well, it was pretty clear that 50% line right here at, on the ES was at 46 and 3/4. And just a reflection of once Magenta is below, and it started day before breakdown, which was on the Friday, and then as soon as pre-market opened up, things started to get soft immediately, and then we broke below that. And we had talked about this when we were writing here, that we would still needed to fill the dip below the red line from right here from the 10th and earlier, which was this wick dip that got bought up all in the same day. And this is that whole everyone's buying the dip until at some point it doesn't. And what we were talking about is you're making just lower peaks each time, and it gets a little tougher and tougher to get back. Now, obviously there was plenty of interest at these dips. Now we're going to see if there's similar interest right within the same range. Given the realities of despite the Fed and their talk, the market is starting to price interest rates higher, and that's something that we typically look at and have been focused on for last few months, especially since we knew as this was starting to develop towards the setup. And you can still see it's weak here from a NASDAQ standpoint as well. That spike of white MBI, Magenta was already below from back over here, the 23% became critical point. And then of course we'd already talked about from the peak right here that we were looking for a move at least to the 50%. A break below that would be to the zero with the spike of MBI white over, and it fills the zero. Did it even on the little wick portion here, but as we had the next spike up at this particular point. This is where I always look for those MBI Magenta pivots below 25. They tend to represent usually pretty decent weakness, and in this particular case, it's doing exactly that from a euro standpoint. And euphoria faded pretty quickly as you realize the eurozone is, I mean, it's interesting to see here in Florence, it's completely dead. They've pretty much shut everything down for, again, no bonus. The flu and things have been going around, but it's not caused some kind of crippling effect, and it isn't really any different than normal seasonal illness. So it's strange. Gold, not really taking much of a move, which is interesting because you're seeing this kind of a reaction. And we talked about this when we were up here in the mid-50s. I'm expecting this to move towards the 120 range, which that would be shocking for a lot of people because that is going to be, nominal rates moving towards, 2.5, 3. And this is an inevitability where as risk rises, people are going to want a greater interest rate return. And the idea that the Fed may, do something more aggressive is always played in the background. But I don't know that they will, because they're still very tied to an elevated market, particularly with midterms coming up later this year. It's usually an indication of when things don't actually do anything, especially in the second half. So if there's going to be something, usually has to happen early. And the last thing that any politician wants to see is rates going up months before an election or even primaries. It's sort of like a nail in the coffin. But this is forcing the hand, oil, out of control. This is what happens when you change an energy policy to restrictive, and that's exactly what's been done. So talk about doing all the things that have the worst impacts on the economy and on wages and inflation. You limit your energy independence. You then restrict certain activities as far as supply chain movement. You fire a large number of workers. These are all the things that drive inflation. So it's just very interesting. And the fact that you've opened the border in the past, which is what the Obama method was in 2012, is just like flood it, keep cheap labor going. That works fine if you have an expanding labor situation. But in this particular case, as you're getting rid of people, you're taking away qualified individuals and trying to fill it in with people who have zero experiences and things. So this is why you're finding really major disruptions, and they don't fill easily. Any basic economic understanding of that. Now, from a Bitcoin standpoint, this is where you would expect to see a safe haven in that from an inflation, but not necessarily because what you have here is basically repeated selling on each of the different pops. Now that's either a result of a normalization or people in usage, but still it's reflected in very soft readings, actually daily too. We'd hit the 39 from before, and we've continued to show weakness here with NBI white leading, and now you get magenta pivoting below 25 here. I would expect that you could get very close to retouching at 39, and then we can see 34 next spot from there. And this has been in a straight decline since middle of November when we first got the sell signal, the magenta crossing below yellow back up here in DOC spread. So nothing has changed for quite some time now. So any of the perma bears in Bitcoin and that kind of setup suffered. Unless you've been able to play both sides of it using the futures model. ETH, Ethereum, and that, getting clean signals with it. I just love it from where it works within our algo setups. It's very easy to follow and pretty precise. From a 50K standpoint, we've had some dips moving around, and I think we're just about even on this long game setup that took place right on this initial dip, and it was good until you ended up with the white NBI spike going there, and that led to the move to the 0 point. And then even with the white leading is where we had more softness, but now you're finally getting magenta moving back up over, and I think we're seeing that play out in the pre-market right now. But here's the action from the beginning. We had the sell from the Friday, came in a little bit late there, and then it just continued, and by the time futures opened in that, it was just these repeated cascades. When you start getting into that kind of depth, we're always looking for little pops that fade. It's one of those where you can get the runner that continues, and I never try and just assume that it's going to break down. So it's one of those where you should still cover and flip to the long setup, but it's one of those where we can see pretty clearly when the long setup flips around, and particularly when you've had a soft weekday, I usually jump on it to attack the downside of those setups. No different than on a really big up day. The short setups are usually pretty weak, and they become opportunities whenever there's a turnaround signal to add back into it. And then as we came across a little bit later in the day, we ended up with a couple of signals that took us back to the 0%, but then started to produce a pretty strong buy. This is where I was talking about, where it kind of held up, a little bit of a breakdown, but couldn't get any white support until really late in that, and then it immediately flipped, and that's usually where you're going to get a lot of short covering bounce, and then usually those big bars, which is what it did. It wasn't survivable because they were all positive extremes. Literally from the very first move right there was positive extreme, which gets a nice retrace value. It's one of those two where someone's stayed with it short or whatever, you're going to have a divergence that can be anywhere from 8 to 15 points. In this particular case, from 86 to 95. Reasonable, just depends on how you want to play those. If the broader day from the 50K was still short, it's one of those where you can attack the higher price move and just wait for this crossover situation where you're moving below 25 with the NBI magenta, and there you go, it moves straight to 0%. And then did it again here in the post market. Pivot comes right here to the 25. Yellow starts to pivot right after it, but red has already crossed below white, and NBI white is above. In this particular case, you still had green leading, and that can lead to some continuation sideways. In this case, it was a little of both, where you dipped first, then you came back up to it, only to do NBI white leading the whole way, and then the expectation for that is clearly to the 0 line, and that's exactly what it did as it drove to new lows, went all the way down to that 45.35 previous algo level from way back, and that's when it caught the post-market bid right there, and has pushed all the way back up to above the close range from the other day. And holding pretty steady right there, so it's still within the long config at this particular stage with sign under red and rising NBI. We'll see if it's able to maintain that. Obviously, there's positive extremes already going back to 56 So I should just mark that while we're here. And that would be the expectation, those ranges in between, because these are all positive extremes on each one of these pushes. So it's all going to come back. Long and short of it, there's going to be continued volatility, which is back and forth, so be flexible both directions. But this particular stage, the bias is slightly to the weak side. So don't be afraid to let some of those sell signals continue if they're strong. But I also say that when you get the buy configurations that we see here with the magenta leading, don't just assume that they're not going to run, because I think that there's a good probability where you're going to find bargain hunters think that they're getting in cheap, and that's going to create some pretty decent rallies. So just be aware of that. But still, the overall daily bias hasn't changed, and until it does, then you got to lean towards the short side of the setup. And it becomes fairly easy because, again, 46.13, definitely pivot, but in this case, we also have the 38 at 46.08. So both of those ranges stick within there, and of course below the 23% aggressive short prospect with white NBI leading at this particular stage. Trade well. We'll talk to you later.